Hey, what's going on, guys? This is Terrence Ray back at you with another stock market update. Currently, right now, the market we got a massive up move. These going for the day. The S&P 500, the futures are up 1.5%, about 85 handles. That is a huge move, as you can see. Let's hide everything. As you can see by this candlestick right here, this is a very large green candlestick. Yeah. What I'm guessing is it's going up to fill this gap right here. It'll probably find some resistance. And I'm getting ready to. This is a chart of the futures, which trades overnight right into this area, is where I'm banking on finding some resistance. So, with that being said, the NASDAQ futures are up um, over 2%, almost 3%, over 2.5%. It's 500 handles. The Dow futures are up 0.25%, and the Russell futures are relatively flat right now. Unless you've been hiding under a rock, we got a FOMC decision coming today. So more than likely, the probabilities say that interest rates will stay the same. At least that's what the odds say, and more than likely that's what'll happen. But I think the movement that we'll get in the market will come at the press conference, like when Jerome Powell speaks, what he says. And I imagine he has something crafted to say something to move the market in whatever direction they want it to go. He'll probably move it with his mouth. At some point, we'll get these cuts, I think. Excuse me. Just by way of looking at the bonds, if you look at the bond market now, everything is green for the most part. The ZB forward slash ZB, which is your 30-year treasury bond, is up. And that's why I think that at some point we'll get cuts because the bond market is going up. Yields are falling, which means, and they are inverse to one another. So you got the bonds breaking out, right? Unless it gets up here and it falls. But right now the bonds are going up. We got forward slash ZN, which is your 10-year note. You can see this pattern with it going up. And if I was to go look at the 2-year yield, right, it's falling. So this is your 2-year, which is right around 4.25. Now, what I will say is if I was looking at a chart like this, uh, I would be thinking about me personally, not knowing exactly what it is. I'd be looking at trying to get bullish. I'd be wanting to buy this. So who knows in the future exactly? You could get a little bounce in these rates right here. Um, and you can trade those on TastyTrade because I'm thinking about putting on a position just to see if we get a pop, in the rates, a short term pop. And that's the 2-year, and you look at the 10-year, it's dropping as well. So with that, that's telling us that you know that at some point now we'll get that cut. Especially just looking at, I like to look at the TLT. TLT got a nice trading pattern. You got a range right here, and you see it break out of this range. It could run next level if it breaks out of this range is right around 96. Then you got what 90, we'll call it 98. Then you got 100 right up here to take this high out right around 101. So definitely in order to get that, we need to see a cut. And let's take a look at I wanted to go over, I closed my iron condor for a small loss, and I wanted to talk about that. So let's bring up NVIDIA. I had an iron condor in the video that I had put on, right? And the market just kept, it was a neutral trade, and the market just kept, getting big down moves. Now let's go to the order chains, and you'll see when I put this iron condor on, just put it on July 22nd, and I collected 119 in premium. And if we go back to, let's see, where's 22nd? Like right here, we had this candlestick here, then it gapped down, then went down some more. And what I did was I rolled on the 25th, I rolled the call side down and picked up 15-cent credit. All right. And then I did another roll on the 29th and picked up 23 cent and picked up another 17 cent yesterday. I rolled down again with this big move here. And then when we had this gap up and this big move to the upside today, where it put me back close to being, almost break even. I was like, well, I'm just down, 30, about 40 bucks or so. And then I went on ahead and closed it out for a small loss of $39. But if I had not done those rolls, I would have been down, close to 100 bucks. So that's when I talk about managing losers, that's one of the things that you can do. And all I did was when I talk about rolling, I think I was out in 37 days. So initially when I put this trade on, my call size strikes was right out here at 143, and then I was at like what, 148. So as the market continued to go down, they call it rolling the untested side. So the tested side was down here to the put side. We're looking at the option chain, it's actually up, but this is down. This is the put side. So the market was going down and testing me. These were my short strikes when I put the trade on 106, 101. And you can see even now where it's at if I had it on today. So as the market went down, I would buy this back, sell this. So I would close this basically. What it would look like, you would do something like you would come here, you would sell this, buy this, and then roll down. And I would move and I would change my strikes. And then the first time I did it, I moved down to here, 136, 141. And that's where I picked up the first credit of 15 cent. So all that was the difference between closing the call spread here and selling another one. And you do it in one trade. And I picked up a credit. You want to roll, I learned to always roll for a credit. I don't want to roll for a debit because then you're paying to move the position. Then a couple days later, it went down again. So I rolled again and just moved it down. And all I'm doing when I'm rolling, moving the position down on the untested side. So the stock was going away from here. I'm moving the call spread down, recentering the trade, picking up more premium, and basically lowering my cost basis. And now I could have stayed in the trade like today with that big up move. But the way I see it is I know with a large up move like that. Now let's go look at this. I'm gonna look at this on the hourly. I want to show you guys something. With a gap like this and a big up move like that, at some point now it could just be going up here to fill these. But I just said with these massive moves like this, right? This is the one thing about when you have an iron condor and the IV rank is not contracting. Like IV is staying bid here. Even though so you may say, well, you got earnings. I was inside of the earnings expiration. I think I was 24 days. Well, let's see. When I took this off today, it was at 23 days. So I was in here. I was inside of the earnings expiration. Earnings is right here. So you can look at the IV on the earnings expiration in like implied volatility at 71.4, but the week before earnings is 57.7. That's why I put the trade here to stay away from earnings. So and that's how you roll, and that's how you roll. It's already a loser, but instead of me taking 100, yesterday I was down like 164 bucks in the trade. That's why I said when I got this big move today, I was like, let's close it. Even if I had not rolled, even with the big move today, I still would have been it would have been like a $94 loss. So instead of taking a $94 loss, I only took a $39 loss, and it's a loss, but not as large of a loss. And that's one of the things that you can do. You can even have when having a loser, you can manage the losses. So trading high probability trades is, trying to win most of the majority of your trades. And then when you lose, manage the losers. So right now I just got 3 positions on. This spy position was actually making money yesterday, but with this big move today, but I'm gonna sit with it. Here's my strangle in IWM. It's still good right now. If we pull that up, we can pull it up and look at the see where it's at. You can see I'm still out here, way out on the call side, and on the put side, I'm way out here. Now, something I could do here, which there's no need, mark this stock or this ETF right now is cooperating. Like we just sitting right here in a range. And I know at some point it'll give me a big move, but right now we just sitting right here in a range. And this is what I wanted to do. Sit right here. And even if it was to move up, there are a couple ways I could play it. It just depends on how far it moves up. Move up to about 230, I'll sit tight. Now, and then at that point, I could roll this side up and pick up some more premium, which is more than likely that's what I'll do. But we'll sit. I'm gonna wait till after today. We should get a lot of movement this afternoon with the FOMC meeting. So that press conference will probably give us a lot of movement. So the best thing to do, in my opinion, is to sit still to after two. I say after maybe 2:30, 3 o'clock, and then I might put something on towards the end of the day. I still have the put spread on in DH Horton or DR Horton. All this was for me was just coming out. It's at a look at it's at a yearly high. This is a yearly chart, daily. Up here, I just come in and put a put spread on. Right. I got what 30 days on this. All I need is a nice move to the downside. That's it. It moved down into here. Cha-ching. I'm gonna ring the register and get out. Um, we do have some geopolitical risk in the market right now, but uh, it's almost like the market is unfazed. There's tensions are riding pretty high right now between Israel and I think Hezbollah, and I seen some right before I came on with Iran. So, but the market is discounting that. Market is all green. So the stock market is telling us like, hey, it's not worried about that. So we just kind of have, watch and see how that develops. On the weekly update, I talked about PSX. Look at it. If you go back and look at my I got a short that I put out just showing that particular clip from it. But if you watch this past weekend's video, these were the 3 stocks that I talked about in the video. PSX did exactly what I said it would do or what I thought it would do. And we right there and it hit that level. You see it's holding right there. So right now, I wouldn't want to get long here, even though I think that it's possible for this stock to long term. This is a nice setup for it to continue to go next level. I mean, if we want to talk next level stuff, we could go ahead and put those on there. This is what we're looking at. Now, ideally, I probably would not use these. I would probably use the extensions to get my levels. So I won't use those. Let's see. Let's take those off. I'll update this maybe later on or this upcoming weekend. We'll see where the stock is right now because you got a gap right here. So this gap may act as support. I would like to see the stock pull back into here, and then maybe try to do something on the pullback. Let's look at APA. It's still in the range that I have it. For me to trade this, I want to see APA break this level. And I looked at this. I put this up on. Remember this on the weekly. See where it's at. I would rather see this get out of this, break this out right here. If it takes out this level at 33, then I could, you could take it to maybe up here around that level. NEE next era energy. Go over that. This is beautiful. Going straight to plan. It's going right to plan. You get something out of here. Hopefully, my range is right there at $80. That's what I would think. And then I would probably put my stop somewhere down right here. So it's almost a 1-to-1 from right here from 75 to 80. That's about $5. Stop will go back here around 70, and that's $5. And I think next era, and it pays a dividend. And matter of fact, it dividend, it says 8/30/2024. So yeah, I'm guessing that's the upcoming. It got to be the upcoming dividend, 51 cent. Not so you get paid for holding this if you decide to hold it. So what I'll do, guys, I'll be I'll be locked in looking at Jerome Powell this evening. Tomorrow I'll go live. I'll set the time up. You got to make sure you subscribe to the channel because I probably put something on. I'll find something to put on during the video tomorrow, and you guys can watch and we'll go over. I may recap what he said, and we'll go from there. More than likely, I'll put the time in. I don't like to give y'all exact times. Make sure you subscribe. You hit that little bell notification so you know when I'm coming on. Because when I come on, I'm talking money. And if you following, I'm showing you this stuff that I do, and my technical analysis, in my opinion, is second to none. And with that being said, guys, I'm gonna be out. Peace.